1. What's good, guys? It is Sam here. I'm with my buddy John again for episode number 2 of Let's Chat. And today we are going to talk about some cool stuff, right, John?
That's right.
We're going to get into the delivery numbers and just talk about Tesla in general for a little bit of time. If you guys have an idea for something you'd like to talk about, let us know down below in the comments. All right, John, can you give us a quick recap of the numbers that we have here today?
Well, I think the big one for me is the deliveries of the Model 3. I think the Model S is kind of a niche product anyways, so keeping track of those numbers is useful, but really they're going to be judged by what they can deliver on their Model 3s, and 80,000 cars, it's a big step up for them. I'm impressed. I know the street really didn't enjoy the number, but I like it.
Why do you think that, I agree, it's a tremendous number, especially when you compare year over year, because quarter over quarter doesn't really tell, I think, a representative story. But year over year, from 56 to 80 is a pretty big difference in terms of delivery numbers. By the way, this chart is brought to us by Hypercharts, or basically that's the website I'm on.
So this is just a guy who makes his own charts. It's pretty sweet.
Yeah, I don't know where he gets the data, but I want to do something like this.
Nice.
Yeah, and if you look at it on the annualized basis, if this is tremendous. This is a big, I mean, from 17 to 18. He doesn't have 19 in here yet, but when you took a look at the vehicle deliveries for 2019 already, if we go back to the quarterly, for 2019, we've got 60,000 right here for the whole entire year or quarter. I'm sorry. And then 95 right for this quarter, and then like 97 for this quarter. So in total, we already have what we had for last year in terms of delivery numbers. And if you the 250 for last year, 245 I think it was. So I think you're right. This is a killer quarter. Why do you think people are paying more attention to, or paying really any attention to, the S and X maybe decline or just leveling out?
I think people are just scrambling for profitability at Tesla. They're just really sick of having to justify their large investments in a company that keeps losing money over and over and over again. But this is just it. They're taking us in a new direction. This is the golden age of internal combustion engines right now. They've had 100 years to perfect the car, and this is a new electric vehicle. It's hard to work out the kinks. It's hard to work out how to manufacture these things at a large scale, and it's just a process they got to go through. So people are they really want it to blow up all of a sudden, and hey, look at all this money we're finally making. But I think it's going to be a long haul.
I think so too. I think it's also a golden opportunity for Tesla. Where do you stand in terms of their position in terms of the rest of the market? I think they're at least 3 years ahead. Could be as much as 5 or 7 years ahead on some of these technological, like whether it's the battery technology that they have, the supercharging network. We've got the AI, which I think is way undervalued.
I think that's their biggest asset, honestly. Any production assets they have, buildings, employees, all of that can be dwarfed by some of the large automakers in the world. But the software that they develop and have already used, and the AI that's constantly updating it, making it safer, they're, like you said, I think they're at least 3 years ahead of anybody else. But the hardware is the easiest stuff to catch up with. And if they're in a dangerous position where they're not profitable and they really have just a mountain of debt, someone could just buy them. So I think that profitability is really their short to medium term focus. It has to be, because they need to get into a safe space where they can just exist for a while and make some money, because that's their biggest challenge, I believe.
Do you think the company's focused on that, or do you think? I think Wall Street for sure is focused on that, but I don't know. I mean,
I agree with you. There's always a disconnect between what Wall Street wants, but
talk to us about that.
Now, can they keep getting financial backers to keep giving them boatloads of cash? Because if they get enough cash to keep going, they'll make it fine. And I think a lot of people have it such a high valuation for the company as a whole. I don't think they're going to back out now. I don't think that scenario is going to happen where Tesla all of a sudden runs out of money.
No, I mean, I think with the growth numbers that you're seeing at such a large scale, when you're, I think there might have like what 40 billion. I don't know exactly what it is, the annualized numbers, but I think they're going to be pretty substantial. What is this? This is revenue segment. So 20 billion this year or in 2018. I feel like they're going to hit somewhere around 30 to 40 billion this year in with their revenue. And I have no idea what it is currently, but when you have something that's that size and scale and it's still growing like a 40% annualized basis is crazy to think that the debt cost or trying to get new capital would even be an issue. And the market spends so much time like focused on, oh, they won't be able to raise the debt or they won't be able to fund it. But why?
Oh, I disagree with that. I mean, whether it's Tesla or Audi or whoever comes out on top at the end of this, that this is clearly where the market's going. Everything's being electrified. All the background manufacturing capabilities, it's all going towards electric vehicles, batteries, charging stations. That's where the technology is going, and that's where the funding is going to be going. So I don't think that you know, they're in dangerous water in any means.
Yes, no. I actually saw some interesting data that even puts their delivery and production numbers for quarter 3 into a bigger perspective on I think it was a global or U.S. basis. Um, Toyota, right, the second or the largest auto manufacturer based on the volume of deliveries in the world, is down like 14% or something year over year. That's crazy. Those are and this is happening with it's
Yeah,
Nissan and Honda.
I think that's just a move towards people living in cities. I think that there's going to be overall less cars needed, but I don't think that this is a dangerous signal for the auto industry as a whole. I think it's a transition period. You're going to get higher margin vehicles, but they're going to be much higher quality vehicles. Most of them will be electrified probably in the next 10, 20 years. I don't see why you'd want to get a gas car 20 years from now. What would be the point?
I don't see. I mean, today, why get a gas car today?
Well, I can afford it. A lot of people can't afford it.
True, but it is only $39,000, and that's a really good um, like price point there. I feel like the Model 3. I don't know if you saw this, but the Model 3 is the sixth best selling car. That excludes like SUVs and trucks and light duty trucks and stuff. But it's the sixth best selling car in North America in or the U.S. I'm sorry, in quarter 3. That's pretty tremendous when
They're
you.
doing it. They're not going to hit the numbers that Elon Musk always gives out, but their overall goal, they've succeeded in my view, anyways.
I agree, and I think that people are going to be in surprise in the fourth quarter here when we've already seen, I think, the first couple cars rolling off of Shanghai with the leaks on Twitter and stuff. Uh, so as if you're testing it out right now, even if you're only doing 1 to 20 a week or something like that out of China, and then you have to rework a lot of the stuff every single time a car goes through. So that's why there's such a low throughput on that. As that, I mean,
Are they remanufacturing cars in China? Or are they making new ones?
so that's actually Gigafactory 4 is being or 3 is being built out there. Um, and so this is crazy, John. I don't know if you know this, but so they started in January. They picked the site. It's already like cleared, like 20 days in, it's already cleared. Then it's leveled out, and then like 4 months in, the structure of the whole building's up, and all the like roadways are built. And now like 10 months in, and we already have a finished factory with the equipment in it that is producing a vehicle. The pace of innovation with Tesla, I think consumers tend to see it as in the vehicle, but in reality, in my opinion, I think a tremendous portion of that actually comes from the pace of innovation when it comes to the manufacturing process. The
That's
look.
where they make money. It's not really the car. The car is already great. I mean, you can read reviews all day. It's got the highest crash test ratings you can get. After you account for all the different economic factors, even if you say, "Oh, this car's $39,000," it's really a misleading number. It's actually a lot less.
What do you? And I have this idea, and I'd love to hear what your thoughts are on if if Tesla were to actually take the time and almost, and they don't need to do this by any stretch of the imagination, but the one of the points of the bear case is that there's a demand problem. Um, but if they needed, and we're about to get into the actual the investor letter that they sent out, but the demand problem, or that's the case, or one of the points for the bear case.
I don't see a demand right
No, not even close. But I think at a very deep level, if they could actually probably quantify the data that each person is giving through the use of autopilot, or put more of the revenue on the back end for autopilot, or something, just to lower the price so that you could increase the amount of people that were in vehicles. Because what I think what you mentioned earlier about the software is 100% on. When I first started making videos about Tesla on YouTube, I actually have another channel, and I started doing this in 2012. I think the first video. I'm sorry, no, 2014 is the first video, but I was like, the only reason I would buy a Tesla is for autopilot back then, and it's from the software.
Okay. Well, I mean, as a consumer, that's good to know. I mean, you could go down the line, safety, just safety alone.
A
How many
hundred,
people can say their car got a 99 out of 100 crash test ratings? I mean, you can't find other cars that do that,
and
electrified or otherwise.
and it
And
doesn't.
autopilot's amazing. I mean, take a nap while you're going to work. That's awesome.
Have you had a chance to experience it yet?
I've just seen them driving around. I've never been in it. In terms of software, my favorite software, I think, in the next 2 or 3 years is going to be Tesla becoming Uber. What happens when you're able to essentially lease out your car during the day? It takes you to work, and then you press a button on your phone, and then it becomes an autopilot Uber. Essentially, someone could pay $20,000 for capital for the car, and then split the revenue from the ride sharing with Tesla. They can get a bunch more units out, and then essentially they're going to be a market leader in in short deliveries,
I, I,
full products, whatever. So
I think you
valuations about revenue, revenue could be double or triple in 5 years. It doesn't the sky's the limit for Tesla.
and as you're mentioning, I think that there's many of those opportunities. If you take a look at their overall business, nobody even talks about their energy, or there's still so much potential for the robo taxi thing, to happen, and their ability to use the wait until the supercharger network is at scale over the next 5 and 8 years, and that's going to be a tremendous moat for this going
Yeah,
forward.
and also opportunities for them to work with other companies. I mean, Audi or Daimler Benz or whoever, they decide to get into the game and they want to work with Tesla instead of against them. They could lease part of the network, have their cars put energy back into the grid. They could be selling energy to homes through the amount of batteries they have. Not just installed batteries like solar systems, but the batteries in the cars themselves.
I think that also is another like moat, in the sense that a lot of these the materials that are going into the batteries, with what we see happening right now, the limiting factor is literally the ability to produce enough batteries to put in these vehicles once you have a compelling product. Because we can see that, and Tesla says this in their investor letter here, and I'm just going to read it here. In addition, we have achieved record net orders in quarter number 3 and entering quarter 4 with an increase in our order backlog. And then I'm just going to continue under the next sentence here, but that's incredible to see that. And then
I read somewhere also that the majority of their orders are for people who just never had a reservation. So to go back to that demand question, it's not Tesla super fans, that they're still working off a backlog of. It's new customers come up, put an order in, and have gotten a car. They're a
once you get into one of these vehicles, so I don't own one, but I did test drive the Model S P100D back when I was in Hawaii. What's that?
Where'd you drive it?
Oh, Hawaii. App.
That was
This was what I think it was in there 15 and 16 or something like that, and so 3 years ago, and I was like, there's no way I'm gonna buy a fucking like it was that good at that point. Once you're in that vehicle, it is going from, and I don't even slightly exaggerate this, from like the Palm Trio or like the first iPhone to what we have today. They both do the same thing. They both do the same thing. You can call, you can check email, you can get on it, you can do lots of different things. You can take pictures, you can get on the internet and social media, right? But one is way better than the other one.
yeah, it's a compelling argument now, and I think the price point only comes down from here. A lot of those ideas you touched on earlier, if they start capitalizing on those, they can just decrease the sales price and just make up all that revenue on the back end. And
And
at that point, the competitors have no real value proposition.
yeah, and the I think the if that's an interesting idea, I feel like to potentially think about recognizing the revenue from the AI, right? Their autonomous driving, because the more cars you can get on the road, and I know this is not the issue, clearly, because we can see that it's the demand problem. They just can't make enough batteries and produce them fast enough. But if it ever ran into that problem, where I think in the next, 36 months, it's potential to hit some of these things, but at that point, we'll probably already be there, so we'll never actually cross this bridge. But to almost like give a discount on the cars just so you gather more data, because that's the winner in this is the amount of data that they are able to collect per vehicle every single day from 500 plus thousand vehicles is
Yeah,
astonishing compared to any other player in the market. Look at what Uber's doing.
that's
Go ahead.
that's really the Silicon Valley playbook, right? I mean, go into debt and just be the market leader at any cost, and they're doing it. They're doing a great job of it. You keep mentioning Tesla making a moat. Do you see them as being a big company that doesn't want to work with anyone else, or I don't see them being defensive in the future. I see them working with people and making partnerships, growing exponentially.
That's a great question. I see them having a moat in many different areas, but I see them at like Amazon valuations. Amazon's around trillion bucks, right? $1 trillion, their market cap. And I think Tesla's at like $42 billion, right around. And, yes, and you think of that scale, right? And think about the awareness of Tesla in the news, right? Anytime you look through, at least in mine, probably because I click on them way too much, but there's so much media around Tesla and awareness around Tesla to have only a $42 billion valuation. And if you want to quantify that, you just look at the numbers and the growth rates, like maybe quarter over quarter from a sequential standpoint, it's not tremendous in terms of a growth rate, but it's still only 1/4 of the year. And on an annualized basis, the numbers are staggering. So when you have something that's this size in terms of revenue, but they only have a valuation of 42 billion. The market's not recognizing this at all.
Yeah, I think people are just waiting. They're used to the Tesla pace now. He promises we're going to be taking trips to Jupiter in 3 months. People just know it's going to take a couple of years.
I think that's the biggest weakness with them, and I don't think they need to do that anymore because I think at that time it was probably an appropriate thing to do to make sure that you got the awareness so that you couldn't get purchased way beforehand and just crush it out. Like
I like his enthusiasm. I like his dreamer style. And
yes,
seeing how that has changed with Wall
Correct.
things
And
don't happen.
and focusing on the customer, because when you actually focus on the customer, amazing things happen, in my opinion. And
Instead of having to push that delivery date by 6 months or a year, you know, people.
oh, so there's
But
two sides to that coin. There's two sides to that coin. I agree. I agree. From a
they're getting
communication,
better at it, so that's good.
what's that?
They're getting better at it.
I think the communication is probably the weakest area, because I don't think they necessarily.
The mundane stuff, you mean?
Yeah, yeah.
Yeah. The big picture, they're great at that. They're great at getting people's eyes wide, but
And if you think about it, there's so many little like moats that are being built right now. This is going to allow, in my opinion, Tesla to create tremendous amount of value for shareholders in the long run, because they're focusing. And by the way, this is not like investment advice. Like, don't do shit you'd see us talk about. But I think
I would.
it, right. You should go buy a bunch of you should go buy a lot of, or sell a lot of puts or something like that, or something. But
I buy a Tesla vehicle, but I wouldn't buy the stock.
no.
No, I think it's too soon.
What can you walk me through your thought process?
Until I see a positive valuation, I don't trust it. There's so much revenue there, and if some other company comes along and just offers a better way for Wall Street to go forward, there's going to be a tidal wave of money going that way, and Tesla could just get bought out if they piss off their investors a couple of times and they don't hit their delivery numbers. You know, they could be at a weak point and just get picked off. It can happen to behemoths, even like Tesla.
No, you're right. I you're right. I don't see that as being a issue, because right, for another company to come along, they would have to come out with at least parity for a lot of the things, and we see like what's out there, and the only thing that's even remotely in the neighborhood of quality of a product, it would be like the Taycan from Porsche, and that's just so subpar in many ways and respects. And this is leaving out the supercharging network and the AI. It just on
Yeah,
a
I think it'll be someone to come up and be a financial savior. That'll be the story. It's Tesla's the amazing technology. They have everything worked out, but they just didn't get the finances done correct. So now they have to work for someone. I think that'll be the story if it happens. But also, part of me thinks there's so much value here that's either overvalued or completely undervalued, depending on how you look at it. If you got a little bit of money and you know you're just going to let it sit for 10 years, I mean, it wouldn't shock me if people became rich off buying Tesla stock either. That's equally capable of happening as them getting eaten alive. Both are great possibilities.
yeah, yes. From a shareholder standpoint, I am actually long. Um, I only have 6 shares or something like that in them, but
Profitable in the next 5 years.
oh, for sure. For five, mine's like I'm in for 2030 ish, because that's what I'm thinking. But I'm thinking like of a 10x return on my money. Like,
Yeah.
I think that there's a ridiculous amount of opportunity here. And so I just want to talk about the margins right here. You can see this, John, right? So right here we have some different margins. We have the gross margin, operating margin, and profit margin. And you can see the upswing. That's a pretty sharp upswing there. Over, let me make this a little bit bigger. Whoops.
Sorry.
Nope, you're good. Where was I? Down one more.
This is a cool website. What's it called again? Hypercharts?
Hypercharts, yes. Let me make this smaller again so I can see where I was. Okay, here we go. So this is their margins here on a quarterly basis, and then we just have it done up in this style chart here, but we look, their margins are increasing across the board. So when it comes to profitability, I don't think profitability is really that.
I think that they have the margins down well. I'm just saying, how much money are they going to have to keep spending? Because they got to be spending it on infrastructure, buildings. There's a laundry list of things that they can spend a lot of cash on.
And I
The
think,
product itself is obviously it's already profitable. Now they just got to start raking it in, paying some people back.
well, if you look at their debt relative to the other OEMs, their debt is actually relatively low if you take it on a comparative basis, like relative to sales or something like that. Their debt is a lot less, um, or their debt to income or something. It's pretty low, relatively speaking, within the industry. So I think that there's a lot to grow in there, and I think what Elon did a couple quarters ago, where he told people to, or he actually I think could have raised money a lot sooner, and chose to not to, and he came out with something that I think says way more about his character and what type of person he is that we need to. We don't need the capital. What we need to do is spend it more effectively. And that's when they laid off a couple thousand people and took a closer look at a lot of the contracts. And I think that says a lot, because if we do see these trends on the macro level where we have Toyota, Nissan, and Honda all down over double digits, like 10, 15-ish percent for all three of them. And there's a macro downtrend. I don't think it's going to be an issue for them to even raise debt in that environment with you as the margins continue to grow as software. So as they're able to recognize more of this deferred revenue that they have to put away for um, the AI here, their autopilot, this is gonna the deferred revenue is gonna continue to grow. So version 10 just came out. I'm curious to see if they actually start recognizing some of this deferred revenue, because that's just gonna add profitability for what the street wants to see. But I mean, nothing's fundamentally changed about the vehicle, and we can look at. I can pull up um, their cash flow if you want to start talking about their cash flow, or just cash flow in terms of what it is and maybe how important it is.
So what's your biggest metric, or your top two metrics, or something? What are you looking for that's going to be that aha moment where they turned a corner? Because I can look at all these different things all day, and I still have no idea where they're going to be. It's such a big, confusing mess to me. I don't know where to begin.
So I think, and I pulled up the cash flow here so you can take a look here while I go into there. Um, for me, I don't actually look at the individual. I really try to understand everything that's happening. So I think we're going to start to see a lot more growth coming to their energy, as well as they finish. I think they're on the third iteration of their tile roof. So we're going to see a product coming to market pretty soon there. The reasons, in my belief, and kind of pulling little bits and pieces, is that over the prior quarters, we saw the transition from Solar City to Tesla, and there was a lot of changes that needed to be made. So I was expecting the energy segment to drop drastically, because they just didn't have enough capacity. When you take a look at the amount of batteries that they're able to produce, they just weren't able to produce that while they were ramping Model 3. So now that they're able to increase, I don't think it's necessarily a battery cell capacity problem anymore. I think it's more of a production in general problem, where they can produce more batteries. And the reason that I say that is because they're starting to deliver their power packs, which they haven't been able to do because of that reason. They just couldn't produce enough batteries. So though, given all of that data, I just try to take the most holistic view on anything like this. Is what I take a look at, just to try to understand, because I think one or two metrics, which a lot of times Wall Street tends to take a look at, just misses so much valuable information, and doesn't it's not representative of like what's actually happening, in my opinion.
Do you think people get tired of that answer?
Uh,
An investor asks some investment expert, how do I know about Tesla? When are they going to be profitable? And then you have to give them sort of a, well, we're going to look at this, then we're going to look at this. Do you think people get sick of that argument and then it's that presentation after a while?
I mean, look at Amazon, right? And they're like a $1 trillion company, and they were losing money for years and years and years, even though they had positive cash flow because they were investing. I think we're going to see that probably in 2021, 2022 with Tesla here, where not they don't. I don't think they need to be profitable. I think that as long as there's that cash flow, the free cash flow there, and they don't have to go to necessarily the equity or debt markets to fund, and they don't have to be profitable, in my opinion, and they can just take their free cash flow and keep investing, because if they're able to generate some of these returns, I think that would probably be a better use of a lot of capital to could just, instead of being profitable and hurting your growth. I think the growth at this point, with where the world is shifting over the next 30 years in terms of, as you mentioned, with the EV market, there's a incredible, I think in 2024, 2023, 2025, in that range, we could see Tesla easily producing a million cars per quarter, and that's when we start to see some really really big impacts.
Okay. Well,
So right here, go ahead.
2024, then 2023, then 2025.
Oh, you didn't like my sequence of
No, you're thinking outside the box, man. We'll have to make a couple more videos.
right. It's a little bit different, right?
That's right.
Because I think capturing
Overall, though, I think that everything's pointing in the right direction. They're going to get all their ducks in a row. And they haven't figured it out now within a couple of years, so definitely. They got a bunch of smart people working there.
John, I think we should do more videos about this. And before we finish them, I think you will probably be long Tesla, at least mentally, and then at some point be put in capital.
Start the time now.
What's that?
We'll start the clock now. So you can make it along.
All right. So what do we see here in the cash flow, John?
Lots of pretty colors.
Yeah.
Capital expenditures. Well, actually, they're down on the capital expenditures. So obviously they had some big projects going, and they don't need to spend as much. Free cash flow is positive. I like seeing that. 3 out of the 4 in the last. If I'm reading this correctly.
Yep. Correct.
That's how we see, and then the overall operating cash flow. That's the way you want to see the chart look at the end, right there.
And I think what we alluded to earlier, if you look all the way back to mid 2017, we have capital expenditures at a peak, and then we see it coming down with every subsequent quarter, until there's this smaller drop off from last quarter to this quarter, from 280 to 250. But I think that actually just says way more about what we were talking about, the manufacturing innovation that's really taking place here. To have capital efficiency when you're growing at this rate is a tremendous. I mean, you look at companies similar to how I do sometimes, and to have a capital efficiency that's getting better when your growth is that high, a lot of times that doesn't happen. At least not until you're at a much more stable growth rate than something.
But I think you had it earlier. I think it's Musk and management. Donald. It speaks more about them. There's a lot of opportunities for them to mix this whole thing up and people to the pipe dream and spend a bunch of money wherever they could, and they're actually being very prudent with it. I mean, quarter after quarter, you can see it. They're putting their money where they really need it and not wasting a dollar, and it's going to work out.
I think this is about. I think we covered a lot of things in this video, and I think that we should do some more videos on this thing as we move forward, and I'm definitely bullish on Tesla, and I definitely enjoyed the conversation we had on this. If you guys did too, let us know down below in the comments, and we will read them on the next show. If you have a good comment, just use the hashtag Stolt in the comment, and I'll find it, and then we'll bring it up at the end of the next episode we do. So, you want to say anything before we jump out of here, John? Awesome, awesome. Hold on a second. Let me stop this.